All right, let's get right into it. Today we are going to unpack the two massive forces, debt and oil, that are shaking the global economy to its core. And I'll tell you right now, this is not your typical downturn. The old playbooks, they probably aren't going to work. The real question is, are you ready for what's coming next?
This quote right here, it just hits the nail on the head. It tells you everything you need to know. We're not just talking about a temporary dip. The fundamental rules of the economic game are being rewritten. You know, that whole mindset that made you money over the last decade, it could get wiped out if you're not paying attention. This is a complete overhaul.
So what in the world is a structural reset, anyway? In this first part, we're going to break down exactly why this time feels so different, and, more importantly, what it means for every single one of us.
Okay, think about it like this. For about 15 years, our economy has been on a total sugar high. And that sugar, it's been the 0% interest rates and the trillions upon trillions of dollars in stimulus money just pumped into the system. It feels amazing for a while, right? You feel like you're on top of the world. But eventually, that crash comes. And when it does, you don't just feel normal again. No, you're left with a massive, painful hangover.
And this is the part that is absolutely crucial to understand. You can't just look at past recessions like 2008 or the one in 2020 and expect history to repeat itself. Those were different situations, and here's the key part. We had different tools available to fix them. This time, the very ground beneath our feet, the structure of the economy itself, is shifting. So let's get into the first major fault line, the first big crack in the foundation. It's our entire system's addiction to debt, or what the folks on Wall Street like to call leverage. And here's the thing about leverage, or debt. It amplifies everything. When times are good, oh man, it's like a turbocharger for your investments. But when things go bad, it's like lighting a match in a fireworks factory. A tiny problem in one little corner of the market can set off a massive chain reaction. And that's the danger with this house of cards we've built.
Now this is where it gets really interesting. Look at how this leverage just stacks up, one layer on top of another. It all starts at the bottom, right? A homeowner takes out a mortgage. Seems simple. But the bank that gave them that loan, well, they're leveraged too. They borrowed money to make that loan. And then it goes a step further. A private credit fund comes along and borrows again to buy a whole bunch of those loans from the bank. And at the very top, you have the government, the most indebted of them all. Every single layer is just teetering on the one below it.
And that brings us to what people call the shadow banking system. Don't let the name scare you. It's basically just a part of the financial world that has way less regulation. These private credit funds have just exploded, lending out money from our retirement accounts and our 401ks. But now we're seeing the first cracks. When people get nervous and start asking for their money back, some of these huge firms are actually hitting the brakes. They're limiting withdrawals. Let me tell you, that is a massive red flag.
So we have this really fragile system just built on a mountain of debt. Now, let's talk about the external shock that's slamming right into it. A sudden, sharp spike in the price of oil.
You know, history gives us a very, very clear warning sign here. Just look at this pattern. It's almost uncanny. A big, sudden spike in oil prices has pretty much been the grim reaper for almost every major economic boom since World War II. It's a painful but reliable signal. Oil is the lifeblood of the global economy. So when its price shoots up, the whole system just seizes up.
And this isn't some slow-moving problem we're talking about. The conflict in the Middle East, disrupting a critical shipping lane like the Strait of Hormuz, caused oil prices to jump nearly 40% in a single month. This is exactly the kind of lightning-fast shock that all that historical data warns us about.
And if you need any more convincing, just look at this quote. This is from the chief economist at Moody's. It's not just an opinion, it's a cold, hard fact based on decades of economic data. It really drives home just how serious this oil situation is. When prices move this fast, a recession isn't just a possibility, it becomes a very real threat.
So you've got these two massive problems colliding, a system drowning in debt and a sudden oil shock. But the real issue, the thing that's probably keeping economists up at night, is that our usual bag of tricks for fighting a crisis, well, it's empty.
This slide just lays it out perfectly. I mean, think back to the last few crises. What did we do? The central bank slashed interest rates and government spent a ton of money to prop things up. But today, inflation is still lurking, so just printing more money could be like pouring gasoline on a fire. And with national debt already through the roof, there's just no room for another giant stimulus package. The medicine cabinet is bare.
So what this all means is that the very institutions we rely on to ride in and save the day, they're completely handcuffed. The Fed is trapped. If they fight inflation, they risk a recession. If they try to prevent a recession, they risk runaway inflation. The government is trapped by its own debt. This time, folks, the cavalry isn't coming over the hill.
And you can see all this uncertainty right here in the numbers. Look, nobody has a crystal ball, but the odds are climbing. Moody's AI model is basically saying it's a coin flip. The prediction markets, which are often freakishly accurate, are pricing in a 1 in 3 chance. Even the most optimistic folks out there are admitting the risk is serious and it's getting bigger.
Okay, so after all of that, let's be honest, it's a pretty tough picture. So what does this actually mean for you, for me, for regular people? The old rules aren't going to cut it. We need a new playbook, one that's built for surviving and maybe even thriving in a really volatile world.
But before we talk about a single strategy, this is, without a doubt, the most important idea to get. The market is basically a machine designed to exploit your emotions. It's built to make you feel euphoric and want to buy at the very top, and to make you feel terrified and want to sell at the absolute bottom. Winning this game isn't about finding the perfect stock, it's about controlling the panic and the greed that are raging inside your own mind.
So how do you fight that emotional war? You use a system. And one really simple one is called the barbell strategy. On one side of the barbell, you have extreme safety. We're talking cash, short-term government bonds. This is your anchor. It protects you. Then, on the other side of the barbell, you have extreme opportunity. But you don't buy anything yet. You just have a watch list of amazing, high-quality companies or assets that you would absolutely love to own, if they ever went on a massive fire sale during a market panic.
And that brings us to cash. For years, we've been beaten over the head with the idea that cash is trash because of inflation. But in a crisis, that is dead wrong. Cash is not just some boring asset. It's a powerful strategic tool. It's oxygen. It gives you the power to be patient and to wait for the perfect pitch, and it gives you the ability to act when everyone else is being forced to sell in a panic.
So here's your new mandate, your mission if you choose to accept it. First, focus on surviving the psychology of it all. Second, build a system like that barbell strategy before the storm hits. Third, be patient. Remember, in times like these, wealth is simply transferred from the impatient people to the patient people. Don't try to be a hero and catch a falling knife. You wait for the chaos to settle, and then you act.
And really, that's the ultimate question that this kind of environment forces every single one of us to ask. A crisis is just a massive transfer of wealth. So, when it happens, are you going to be part of the herd, selling out of fear at the worst possible moment? Or are you going to be the one who has the clarity, the cash, and the courage to see the incredible opportunity that all that fear creates? The choice is yours.